Hello guys, welcome to the Trading Parrot. I'm gonna do the market close update. I'm also going to include a little bit of an overview on general markets since today I didn't cover that and we had a decent move to the downside. So let's review all of that, starting with the 4-hour time frame. As you can see, we are right at the same price we were on the 28th of February. All of this after the Trump pump, we went to 94.8k. We put the aggressive target right there with the conservative at 91, and we say that at that point we will most likely reverse all the way back down. People thought it was a political comment, but indeed it was just a matter of statistics. Every time we go up thanks to a political persona saying something bullish, it's just a short-term thing and then we reverse it. Well, here we are at around 79k, and let's focus now on the technicals. On one side we have this ABC pattern that doesn't necessarily need to stop here, but I'm on the lookout on where it's going to stop. If I place a Fibonacci trend extension from the 94.8 to this bounce at 81k and then connect it with the next stop, you see that this is giving us the extension of 1. If you are familiar with the ABC pattern, it doesn't necessarily need to just give a 1 extension. It can even give a golden pocket at 1618, in which case the next target could be around the 71k. So let's see what are the chances of that. At the moment, the 4-hour is in this squeeze on the RSI. You can tell that if we connect these 2 points where we reach an RSI of 17 on the 4-hour, which is extremely low, after that we started producing bullish divergences, and connecting those points give us this low of 27, and right now the price is coming back lower and putting higher highs on the RSI. So the question at the moment is whether we're gonna manage to produce and complete a W pattern with a breakout from here, or indeed if we are gonna break the support and go and meet once again with the yellow line of the death on the 4-hour, which we are tracking since October. You can see that we have on every flash to the bottom we get a move and touch this test line. Once we did it on 20th of December, then the next time on the 3rd of February. In this area in here was the area where we were bottoming at 78k end of February. So if we do it once again, we could come back and test 15. If we do so, we can start once again looking for another rally, another move. I don't think it's gonna be the case that Trump is gonna speak anything bullish at this area, but you never know. Last time we were here seeing the breakout before he spoke, and I think he spoke around here at 86, if I remember right, when we needed the last push to break outside and above the neck of the inverse head and shoulders that we were seeing at that time. So either we have a bounce and breakout on the 4-hour from this area in here, or we go one level down and we test that final support once again. Remember that on the first touch of the yellow line, if we go to 16, that is not the bottom of the price. That could be just the bottom of the momentum. Going back in time, at this point on 25th of February, we reached 17 when the price was at 87. Then we reached around 19 when the price was at 84. And finally, at an RSI of 22, which is a lot higher than just 17, that was the actual bottom. And that is the typical scenario when you get bearish divergences. So if you get here and you see that we hit 16, don't necessarily think that is the bottom. It could be just that you are here again. I also want to share that I managed to fill my order at 77.5. So I'm happy that I'm having some initial exposure now to the market. On the long side, on the shorts, as usual, I prefer not to share my entries because people tend to get wrecked with the shorts, and you know the typical story. They blame you for anything that they don't know how to handle, if they don't have experience and all of that. I'm not gonna cover the weekly, the daily and all of that. That is all included in the video in depth that I published before this one, 40 minutes with all the alpha. This is just a catch up to see the latest moves of the price. So let's continue with the liquidity. You can see that the liquidity around 77 got hit. This is liquidity that overlaps with the CME gap. So let's cover the status of CME gaps. On the top side of the screen, you can see the actual price on CME premium, and the gap is around 84 to 86. I know that you can place the CME above the week, that the closing price is what matters, but let's just be conservative and take just this area in here. I don't want to place it at at 86,500 and then we don't reach that level because we not always take all of the CME anyways. Also, when I'm giving you the prices on Binance, there are always different structure in the price. You can see if you compare the price action on CME versus Binance, you can see here we have this low and then this area in here is higher low, and on CME that is a lower low. Therefore, it forms a different gap and it's very difficult then to speculate where to place this price on Binance. So that's why I'm being a bit conservative in placing it at 86,500 and the bottom at around 84. Of course, do your own research, and if you have a different CME measurement, just share it in the comments. Maybe we can get to a common agreement, or join my Telegram. Every time I check on my Telegram group, there's hundreds of messages. I'm struggling to read them all. Sometimes I reply, sometimes I miss another 100 messages. All the links are in the description. Never ever search for one of my social networks. Most likely you're gonna find scammers. So to get the official ones, they're always in the video description. We also have the CME gap from before, the one that we built in November, and we have done great progress today in that sense. In my opinion, now this is fully gone. We went to 77,300. You can even see on CME Premium that it went to 77,500, and that is way beyond the price action on the lower end in here. So let's say that is gone. So my focus now is on whether we can get a bounce into this CME. When are we gonna do that? I think at the moment we can continue going lower, in which case I can engage a second order. I need to think about it. I need to see further price action into the week. So if the price moved from 77,500 to 86,500, that will give me a 12%, and since I'm using a 2x, that will be like a 25% profit thanks to this move. I am hoping that we go a little bit lower and I average down in another area of interest. Areas that I'm interested initially is the 72 area, 73.5. That is the top of the previous high. Remember that on every test in here we go and kiss that. We also have this very significant line in here, but that meets with this line later that is at around 66k. You also have the support at 61, 62 that some people are talking about it, but I think it's that a little bit going too far, and it's very important to keep an eye on general markets to make these decisions, and I'm gonna cover that as well because the Nasdaq has already hit the initial target. Continuing with liquidity, and before we go to the general markets, you can see that we have the 75 and it's a spike of liquidity, then you have the 73, 74. But something that stands out in this area is that the depressions, the hills are quite shallow. Therefore, there's almost a continuous in here that goes all the way to 72, which indicates that there might be no pauses if the price moves in here. It could do a quick and aggressive move and take it all, leaving many people, including myself, still thinking where to place our order to catch the move down and potentially a revenge rally, a dead cat bounce right after. Looking at liquidity from the longer term, you can see that the lucky bastards at the top are well positioned with all the risk. At the moment, price of Bitcoin needs to move 60% up to hit them hard and to take both levels. If you've been watching my channel, level 1 is gone, level 2 halfway was taken, and at the moment we have pinched at least the red is gone, so there is some yellow in here still left over. To complete that, we need to go to 76.7. After that, we have the level 3, which is the previous all-time high, and it's a level that many people are talking about it. Beyond level 3, if we go beyond that all-time high, liquidity reduces significantly. So if we see the price still going lower than number 3, in my opinion, is because really market makers will want to go for the next red, and that is in bear market territory. So that is around 50k and beyond. Up until 46,500, there's a huge level of liquidations, even larger than the previous all-time high. If we compare those levels to the ones at the top, they still cannot reach the level of magnitude that we get beyond 110 to 130. And if you admit and accept this statement, I think there is just too much liquidity there to allow for those shorts to profits. So unless it's the market maker itself taking advantage of this and manipulating the whole price, if this is traders, it's very low likely that market maker is gonna allow them to go into a bear market, putting an 80% down down without first getting hit. Remember the previous cycle, there was a similar situation at 65k and market maker went, hit them, put a new all-time high at 69, and then once it convinced everybody that we were going to 100k, finally we enter into a bear market. It is not guaranteed, just a thought. It doesn't need to necessarily play out like last time, but it will be really surprising that they get away with that. Liquidation levels, how they are progressing at the moment, and you can see that there is this 84k standing out across all this range. The only thing that comes close is 95.6 on the upper end. So far, longs are being smashed once again, reaching 830 million in liquidations, with 77% being them. On the order book, we can see that the longs are insisting at this area because it was previously support in an order block. So they are trying to put some support in here, staying at 0.21 in the bid, which you know that is what shows as green in these areas. And sometimes it works pretty well as support in past performance. Sometimes it works really well if you DCA, for example, in here 1, 2, 3 orders and then exit at 94.8. And some other times it's just the perfect buying area before a big bounce up. Longs are again extremely increased, reaching 75%. That area in here, 25th of February, was very similar. It didn't necessarily mark the bottom, but the longs stick around all the way down and eventually manage to push the price higher. Funding rates in the negative consistently all this period. Right now it's not negative, but areas with loads of funding rates in negative eventually form a bottom. Not necessarily at that price, but in a close proximity, at least in time. We continue in extreme fear. And in terms of liquidations on high block capital, you can see that it hasn't been gone fully. On the 1 month, we still have up until 76. On the 6 month, again 76. And on the 1 year, it still stands out quite shiny in here at 76. If you want to find anything as shiny as that in the 1 year, you have to go to 47k. So I think we are hitting a pretty interesting area, and I wanted some exposure there, and I'm ready to add more to my longs. Levels needs to be discussed and thought a little bit more, and I will let you know in my future videos about that. The details of my plan and the exact entry with perfect timing are all going to go to my Patreon. Let's look at these orders in the order book, but before that, if you are on the lookout for an exchange to trade Bitcoin, consider one of the options in the links down below between Bluffin, BitUnix that are both non-KYC offering great bonuses, or OKX that is requiring KYC but offers a much more substantial rewards of $60,000. All the links are in the description. Let's continue with the order books. The liquidation levels at the moment on the short proximity are reaching almost 600k, so that is a 50% more than this morning, which is good, but it's all of course not perfect. Maybe if we get to 76k, that's gonna reach around $1 million again, which is more or less the value that worked pretty decently at around 78k last time we went for the previous low, and then we bounced to 94.8. Order booking here, you can see how they are chasing the price to short it. First at 95k, they moved the order to 91, then to 90, and right now is placed at 88k. That is a 76 million area. After that, it decreases to 20, 30, and 16. And below the price, you can see on the 1 month on material indicators that we have some caution below the price up until 73.7. Below that, it decreases significantly. So this is all the area that overlaps with the previous high in 2024. That 73.5 is precisely where I sold all my Bitcoin. Funnily enough, around this area, I'm rebuying now in a new range. I would have never thought about that at that time, but here I am. Let's look at the orders on Trading Light. You can see here is the area where we hit the CME gap. The interest in buying fade away as soon as we went there. You can see the orders left. The ones that are still standing are at 72,500, and you have 1.1k at 70k and 1.1 again at 69,800. Fair value gaps, which are extremely important now that we have broken structure and we have an order at 77. So it's pretty important to decide here if we're gonna take profits on which one of them, and if we fall below and we enter with a new order and we average down, which new fair value gaps gaps we have to the upside to get us out. The most interesting fair value gap at the moment is between 74 and 69,900. So 70 to 74 is quite fat. There is nothing as fat as that at the moment. And we have some fair value gaps with upside up until 88k. Notice that that is the area that people are wanting to short. If price goes lower, I suspect that they're going to continue with this behavior and potentially moving one level down the ladder. They really want to short if price gets any strength. That is how it looks to me. Since there's so much weakness in the price, unless I see them gone, if the price gets very close to those selling orders in this weakness, I might decide to pull out before getting there. Remember that around this area we have the CME gap, so this fair value gap overlaps with that. The 81 could be a kiss goodbye before going to new lows, and general markets are in a complete disaster. Let's refresh this. NVIDIA with minus 5%. And let's look at the targets that we have met. Remember that we called for this breakdown on the Nasdaq. That was on the 24th of February. Pretty much 2 weeks ago, we were talking about a deeper correction in the general markets. We were talking about a double top on the Nasdaq with the target of 19,300. And you can see that today we have perfectly reached that. And the question now is not about bragging about this top, but mostly about deciding whether this one that resembles many other occasions is any different to the previous one. And I think the answer is unfortunately yes. And that is mainly because of the effect on the VIX, thanks to all this volatility. On the VIX, continuing with a little bit of bragging, you can see that on the 16th of December, we called for the breakout to the upside. We went sideways, we placed a double bottom in this area, and we continue to the top of the range. Right now we are at 66. So this was something that we were calling on this candle in here at levels of 16s, and now we are at twice that level on VIX. I made multiple videos, but no one wants to watch them anyways, but I still think that it's very interesting that you can use a stupid RSI and some levels of support and resistance to forecast some moves of the indexes. I'm not claiming all the moves because that's impossible. Let's look at the S&P. The S&P is halfway to my target to 5.3. It moves much slower than the Nasdaq, at least these days, and it broke down from this channel on the 24th of February together with the Nasdaq. The Russell with the head and shoulders has broken global support, and doing so together with the breakdown that happened prior to that on the 24th of February and more than halfway towards the target of 1.9k. Gold is just going sideways. Dollar index went to the level of support at 103.5, but it broke once again another level. Last Sunday, it pinched the global support. It should have stopped at 42, but it closed at around 40.6. So in theory, guys, this just by itself, a weak dollar, should help with Bitcoin. And people are scratching their heads and thinking, but how come dollar is weak and Bitcoin is crushing? And I think there is the perfect storm at the moment. So we have a weaker dollar, but at the same time, there is extreme fears coming from all the back and forward on politics and geopolitical tensions. There is extreme amount of noise, in my opinion. One day we hear one thing, the day after we hear the opposite, and markets are really not liking all that uncertainty. There is almost no news of a rate cut, so I will say a weak dollar is great, but under these conditions, where if the S&P, in my opinion, breaks the support of the target and it goes beyond that, we are risking to have a correction on the S&P as significant as the one that we have in 2022, and that's bear market. But on the other hand, if we don't and we hold, for example, 5.6 on the S&P and we start reversing back up, and thanks to all the liquidity that is coming from the M2, we continue printing that liquidity. This week we have seen a higher high on M2, which is incredible, but unfortunately markets react to these things in a delayed way. So this is good news, and hopefully we can sustain this trend to give some air to markets so they can at least go sideways and not end up straight away going into a bear market. Most of the stocks are starting from weeks ago to already put ugly shapes. Google, Apple, head and shoulder, bearish structure on NVIDIA. We anticipate this move when we were going up to 145, and I say watch out in here, watch out for a change of structure, and we have confirmed the change of structure and continue with a second consecutive week into this target. By the way, I forgot, but on NVIDIA, I have a specific target or an area of interest if you want. On the monthly, you can see this zigzag of the RSI, and if we were to do the same thing and fell to 45 RSI on the monthly, that will take the price to around $70 to $75. Of course, it's a moving target, but that could be the first moment that NVIDIA stops, assuming that we continue with this trend. Amazon has been a few dollars away from hitting our target of 189. It hit 191. So $2 away. Tesla already went into the support on the weekly and lost it. That was around this area and it went beyond that. But of course, this is a weekly candle. So let's see if it can hold the support on the weekly at 37 RSI. Palantir finally has broken the support of 81 and now is meeting up and shaking hands with the weekly 21, but it has done a major breakdown in here. This is ugly as F. Look at this. This is support from 2022 and you got support in 2024, and on 2025 you lose it miserably. You first had a breakdown on December. We talked about that. We came back to give a kiss goodbye, or a revenge rally that we call at 86, and then we were sent into support and lost it last week. At the moment, this is pointing down and losing the median, so I'm gonna continue monitoring that. Next level of support is $64, but watch out with that, because if we lose the exponential move on the price as well, on the RSI we already did, you can complete this double top formation, and that can have a very ugly target, which I cannot believe really, but I don't know, that's the technical target. What can I do? Microsoft has a very similar pattern to a Head and Shoulders. Meta has a breakdown from 2022 as well, just like Palantir. MicroStrategy broke down on the end of February on the monthly, and right now is below the last line of support 1, 2. On the third attempt it couldn't hold it, so it's risking on the monthly to go and meet with the 21 weekly, which is around the same area that we are looking for on Bitcoin, which is the previous flag around here. That is $170. Alright guys, I hope you enjoy the evening update. If you do, hit the like, subscribe, and write down a comment down below, and I'll see you tomorrow. Bye bye.